And when we think of the convertible market, a lot has changed over the last 2 years, especially when it comes to new issuance. When we look at 2020, it was one of the largest new issue periods ever in the convertible market, with over $100 billion of new issuance. If I put that in context for you, the total market size at the end of 2018 was roughly $175 billion. As of April 2021, the convertible market is roughly $360 billion in size. So there's almost a doubling of the convertible market in a very short period of time. When we entered 2021, many strategists were predicting that new issuance would slow down because 2020 was such a big year of new issuance. In fact, what we've seen so far in the first half of 2021 is that it's kept up with the pace of 2020. We've almost done $50 billion of new issuance in the convertible market, and we're not done with May of 2021 yet. So again, the growth of the convertible market continues. What that brings and what that means for the income and growth is, more importantly, is the opportunity set. And with it comes new issue, and new issue are typically total return convertible bonds that have an asymmetric risk return profile where you're participating on the upside and you have dampened volatility on the downside. One thing when we look at the convertible market that we do get a lot of questions on from investors is, what is the credit quality of the convertible market? Because when you look at it, there's a big portion of the convertible market that claims to be not rated. And many investors assume that that not rated bucket means that it's a low quality company, and they just don't want to get a rating from the rating agencies. But what we find from the typical issuer in the convertible market is that it's their first time issuing debt. They've outgrown their capital structure. Maybe they funded their business with a term loan and now they're making an acquisition, they're expanding manufacturing facilities, or they're growing to meet the demands that they're seeing in the marketplace. So typically our first time issuer in the convertible market doesn't have other debt on the balance sheet. And in order to get a formal review from the rating agencies, not only does it take time, but it also costs money to do that. And it prevents a company to come to the market quickly. So yes, we are aware that the not rated portion of the market has grown. And if you look at where it was a decade ago, the not rated portion has actually grown significantly. But when we look at the credit metrics of these companies, we find that about half of them, based on our internal credit rating, model up investment grade, and the other half are below investment grade. The other thing to note on the average characteristics of the convertible market is a majority of the companies that are issuing converts are large cap companies. 60% of the market of the convertible market has a market capitalization of greater than 10 billion. So it just gives you a sense of the type of issuer, the type of company is not a small cap company. The last trend that I want to highlight in the convertible market is, I did mention the tremendous amount of new issuance that we've seen in the last 18 months. The other characteristic that is going along with that is that the average issue size has also gone up significantly. So if we look kind of at the middle of last decade, it was very common to see a 400 or 500 million or $600 million deal. In today's market, the average deal is probably somewhere between the 800 and 900 million, and it's very common to see issuance over 1 billion in size right now. So it's a very favorable trend that we're seeing in the convertible market, is not only are we getting a mid to larger cap company issue, but we're also getting a much bigger deal size.
Allianz Global Investors.